Long before apps, trading screens, and ticker symbols existed, global commerce looked very different. Back in the 17th century, one of the most powerful business organizations in the world was a trading empire based in the Netherlands. This company sent massive fleets across oceans to transport luxury goods like spices, textiles, and precious metals between continents. Operating fleets that traveled thousands of miles was extremely risky and incredibly expensive. Ships could sink, cargo could be stolen, and voyages could take years to complete. To solve the funding problem, the company introduced a new financial idea. Instead of paying for voyages entirely on its own, it allowed everyday citizens to contribute money toward these trips. In return, those contributors received a portion of the profits if the journey succeeded. This approach spread risk across many investors while allowing the company to expand its operations far beyond what it could afford alone. People began buying and selling these ownership stakes in public gathering places like trade centers and cafes. Without realizing it, this process laid the groundwork for what would eventually become modern stock trading. Over time, businesses around the world adopted similar methods to raise money. Today, entire industries revolve around stock investing, complete with financial careers, educational programs, and media coverage dedicated to tracking market activity. However, today's stock market operates on a much larger and more complex scale than those early trading ventures. To understand how it works now, imagine a startup launching a new specialty coffee brand. Before selling shares to the general public, the company usually seeks funding from major institutional investors. These investors evaluate the company's potential growth and financial stability. If they believe the business has strong prospects, they help finance and organize the company's debut on the public market through a process called an initial public offering, commonly known as an IPO. Once the company becomes publicly traded, shares become available for purchase by individual and institutional investors. When someone buys a share, they gain partial ownership in the company. The capital raised from selling shares helps the business expand operations, develop new products, hire employees, or enter new markets. If the company performs well and more investors believe in its future success, demand for its shares typically increases. Higher demand often drives the share price upward, increasing the company's total market valuation and raising the value of shares already owned by investors. On the other hand, if confidence in the company weakens, whether due to poor financial performance, negative press, or broader economic challenges, investors may start selling their shares. When selling pressure outweighs buying interest, the stock price generally falls, reducing both investor wealth and the company's overall market value. Stock prices constantly fluctuate because they are influenced by numerous factors. Businesses must deal with rising or falling material costs, changes in technology, competition, and labor expenses. Investors also react to leadership changes, corporate scandals, government regulations, and global economic trends. Even investor emotions and public perception can dramatically affect market behavior. Because of these variables, stock prices often experience short-term volatility that does not always reflect a company's long-term potential. Market optimism can fuel rapid economic expansion, while widespread fear can contribute to financial downturns. For this reason, many financial professionals encourage long-term investing strategies rather than attempting to profit from rapid short-term trades. Despite ongoing efforts to develop advanced analysis tools and predictive models, markets remain inherently uncertain. Importantly, participation in the stock market is no longer limited to large financial institutions or wealthy individuals. Online brokerage platforms have made investing accessible to millions of people worldwide. With proper research and education, individuals can invest in companies they believe in while working toward personal financial goals. Every investment journey begins with learning how the system works and taking that first step into the market.